Hello and welcome to Fondra Direct Monthly Roundup, the July edition. Welcome back after the hottest recorded summer in 200 years. Everyone at Fondra Direct hope that you have all had the chance for some well-needed R&R. What has not been resting is your enthusiasm around investing, as all fund categories are positive in net inflows, according to Gustav Sjöholm from Fondbolagens förenings. Swedish new investments were unusually high during July. Geopolitical worries and questions around the mood of the stock market this coming autumn has strengthened the existing trend towards lower risk placements. More than half of the new total savings have been in fixed income. Notably, fixed income is viewed as one of the lowest risk available for sale within the fund categories. The Swedish AUM continues to break records, hitting an all-time high this month of over just 4,300 billion krona, smashing last month by an additional 63 billion krona. A lot of this seems to come from the growth within the fund themselves. Looking at equity funds, we can see that the geographical diversification continues as global funds is still popular for the Swedish people, followed by North America funds and sector funds. Sector funds are where you are able to invest in a specific sector of the stock market, for example, healthcare, technology, farming, and the like. On the other hand, emerging markets, including Asia markets, whom generally represent a higher level of investment risk, showed net outflows. As we spoke about in the June edition of the monthly roundup, Matthias Martinsson from Tundra Funds gave us his reasoning as to why investors may be taking an even more cautious approach than usual when it comes to this sector. If we look at the Morningstar data for the last 30 days, Tundra, Pakistan and Vietnam funds have the highest performance in the Swedish market. Interestingly, both these funds were one of the lowest performers during our June edition. This clearly demonstrates the kind of volatility that investors such as yourselves are pulling away from at this time, which lines up with what Gustav Sjöholm mentioned earlier. On the other end of the spectrum, the worst performing funds have all been exposed to Turkey this month. Turkey has experienced one of the most geopolitical turbulent times in a decade, and the Turkish lira has fallen more than 20% in the last 30 days alone. Let's hope that Turkey and the US are able to resolve their differences. Moving on, there have been no 5-star upgrades to report this month for any Swedish fund companies. On the other end, Catella, Sverige Active Hållbarhet and Nordic Equities Sweden have moved to a 1-star. During July, Martin from Fondra Direct had the pleasure of interviewing Per Stoll from Placera. They discussed the fall of the Swedish crown and how an undervalued currency should affect your investment decision. This interview is in Swedish and very well worth watching if you are wanting to gain more knowledge about currency exposure. Moving on, if we take a look at a fixed income fund, as this seems to be the saver's choice at present, we are reviewing the Coeli Likviditetsstrategi fund. According to the EU standard, the fund itself is rated level 1, which is the lowest available risk category, and it is a low-risk fixed income fund managed by Gustav Fransson. As you can see with the orange line on the graph, since 2010, the fund has had over 20% growth, which is significantly more than its benchmark OMRX T-bill Sweden, indicated in black. Year to date, the fund is up over 1%, which is again ahead of its benchmark. As stated previously, fund investment should be viewed as a long-term strategy, and it seems that such a low-risk investment approach gives the old saying of slow and steady wins the race an element of truth. According to the fund manager, Gustav has noted that in July, the development for the fund was stable, with small price movements for the most of the holdings, and the fund gained marginally. In terms of his long-term approach for the fund, he notes that the yield spread between longer and shorter dated America Treasuries continues to decrease and has historically been a sign for a turning point in the economy. Gustav believes that investors should be a little bit more cautious than usual with their allocation to credit. He believes the economic cycle is at its peak, which could result in a tougher environment for risky assets. Over and above this, there should also be caution around the political developments such as the US trade war, Brexit, and politics in Italy. This increases risk overall. So when it comes to credit, this particular fund has no preference between investment grade and high yield at this time, but rather believe that the most compelling investments are found in between these two categories. He believes that in today's market, it is crucial to focus on issuers with a solid business model and companies for potential for improvement. So that gives a really good overview of this Coeli fund and the end of July edition of Direkt. See you again next time.